Welcome to this update on our quarterly Sector IQ energy publication. I'm Thomas Yagel, Vice President of Market Development at S&P Capital IQ, and I'm joined today by Paul Waine, Global Director of Commodity Risk Solutions at Platt. Both Paul and I are regular contributors to the energy publication, and we are excited to be with you today to update you on the unfolding story in the energy space, namely crude prices, as well as to share with you a new analytic that we hope brings transparency to the space, our Global Energy Survey. Welcome, Paul. It's been quite a roller coaster ride down from the peaks of $115 a barrel on June 19, 2014, hasn't it?
Thank you, Thomas. Yes, it's great to join you today. The oil markets, again, are experiencing significant price changes. Let's look back over the past 2 to 3 years to help us understand what has happened. In 2012, the dated Brent price traded in a $40 range. The high was approximately $128 and the low $88. In 2013, the range was $22, a high of $119 and a low of $97. Between January and June 2014, the range narrowed to $12, high of $115 and a low of $103. And then the excitement begins. If you're a consumer, falling prices reduce your cost and herald good times. If you are a producer, low prices create, shall we say, challenges. And for the commodity traders, volatility is good. From 19th of June 2014, the dated Brent price, assessed by Platts, fell from the peak of $115.31.5 to a low of $45.22 on 13th of January 2015, a fall of over $70 over a period of 145 days, 7 months, a price collapse of 60%. The 2014 price fall ranks second by dollar value in the history of crude oil price records. Only the 2008 fall is larger, and the 145 days is the longest period from peak to trough.
Paul, can I ask you a question? Why are we using dated Brent? What is the importance of this metric?
Yes, Thomas, an important question. Platt's dated Brent is a benchmark assessment of the price of physical light North Sea, off the coast of northwest Europe, crude oil. The term dated Brent refers to physical cargoes of crude oil in the North Sea that have been assigned specific delivery dates. Sources estimate that around 60% of global crude oil prices by reference to Brent, including dated Brent. Price volatility has continued since January. A month later, mid-February, dated Brent was back up to $60 per barrel. This time an increase of 1/3 in 4 weeks. A month later, again, prices have fallen to around $55. I'm sure this is not the end of the story.
Well, that's a really interesting story, Paul. In our latest publication, we highlighted polls from September and November of 2014, where we asked our audiences where crude prices would be on the first trading day of January 2015. These polls really highlighted to us the important opportunity to add transparency to the market by regularly polling people in the industry on their views of how key factors are evolving. This prompted us to launch the Global Energy Survey, which is running between now and the end of April. This straightforward survey asks 10 questions, including ones on the likely price of crude in the future, to the spread between Brent and WTI. The link to the survey is shown on your screen and can also be clicked on below in the comments section. We would love for all of you watching this to spend 5 minutes and fill it out. Paul?
Many years ago, as part of a university course, I was asked a question about the formation of commodity prices. The past several months teach me that I'm still learning, and I believe it's a safe bet to say the professors are also still learning. Commodity prices are often unpredictable. Only last September, at an industry conference, I saw a presentation that spoke about the lack of volatility in oil prices, and all the numbers supported the presenter's argument. Of course, he was mistaken. Volatility hadn't dried up. Like the spring floods and the snow melt, oil price volatility is back. The commodity markets are once more alive. And this is the lesson to be learnt. Whether you are an investor or a participant in the commodity markets, producer, converter, or consumer, it is important to understand how commodity markets can behave. And it is important to develop your strategy to manage the market price excitement.
Thanks, Paul, and thank you our audience for joining us today. We look forward to seeing your views reflected in our online survey, and we hope you will take a look at our current issue of Sector IQ Energy, as well as at our next issue, which will be available in mid-April. Thank you.